So first we will quickly take a look at what all trades I took today. And then I'll explain bar by bar. The first trade was somewhere here on the Nifty chart, index chart. On the yeah.
Screen.
Oh, okay, sorry. Is it visible now?
Yeah.
Okay. So the first trade I took somewhere near bar 8. If you see the index, it is not a trade at all actually. But in the Nifty 50 chart, it was somewhat like a double top pattern after a big gap up. Now the issue was it's not moving as per you wish. I say both are very different. One is creating a double top, one is just continuing lower high, lower low structure. And when this bar retraced all the way here, I got this stop loss hit. I was taken out here. This trade was a scalp. Ignore that. If you want to know why I took the trade, let me come to the explanation part later on. The second trade was all the way down here, bar 39. In the index, if you see, this is not a very good signal bar. In fact, it's not a signal bar at all. If this bar had a big, larger body, somewhere here it was opening and somewhere here if it closed, then that would have been a good signal bar. But on the futures chart, if you see, this is a decent enough signal bar. That is where I took the short, and my entry price was not all the way down here. It was somewhere here 150-ish. I got 182 or something. Yeah, okay, 183 I got out. 4.5-ish, give or take. So apart from that, nothing much to trade. There was a trade here on the bar 68, 8 entry bar, and bar 67 was the signal bar. I'll explain later why is that a trade. So let's go to the replay. And also, if you see from 11 onwards, both Nifty 50 and index charts were moving quite similarly. So I'm hoping at least tomorrow we get a normal chart on both the ends. Let's see what happens. This is the only issue I have with the closing. They shouldn't be doing this, but yeah. We have a huge gap up, bear bar, closing not so strong, but okay, decent enough. There is a gap between the EMA and this price currently.
Wait, one thing.
Yeah.
So the closing price on the at the end of the day.
Yeah, this one, right?
Yeah, another one.
You mean bar 73?
Yeah. So no. The previous one was yeah.
Yeah.
So will we be considering that or the?
Yeah, that is the issue I have, because I am also not able to say, okay, this is the closing. If you come to the daily time frame,
Yeah.
this is the index chart. Look at the discrepancy in the futures chart. From the one is bull bar. August 3rd is when the new SEBI rule came in. So one is bull bar on the August 3rd. On the futures chart, if you see, it's a trading range bar. There it was a significant trend bar. So much of discrepancy is there. Here next day was a implied reversal bar or a doji bar, whatever you want to call it. And here it's a significant trend bar on the downside, almost significant trend bar on the downside. So can't say for sure, but this is not the case with Sensex at least. Sensex is run by BSE, right? So they were a bit okay. This was a futures chart and index. It is not perfect, but it's at least similar.
Okay, but generally, what would you consider apart from these exceptions?
Hmm.
Generally, also we see that the closing price will be different, not this much difference, but
Yeah, that
little
is
bit.
fine. Those small, maybe 10 points or 20 points up or down, that is fine. But this is just too much. If you see, market stopped trading on bar 73, and from there to here, it's like 0.62% jump on the same
So
day.
if there is a little bit difference, so which one will you be considering? The
You
end of
mean,
the day, or
okay, for now, let's assume this is where the last trading happened, right?
mm,
If you're getting confused, you can also go to the gift nifty chart. What is gift nifty? This is where 73, right? Okay. 9:15 it opened. Somewhere here it closed on the Nifty 50 index. Post that, it traded all the way up here. So I can say that okay, there is a gap up overnight. What I'm trying to say is, if I plot both the charts next to each other, 1 minute. Okay. If you see the price action from 9:15 to here, this is where the bar closed. On index chart, if you see, this is where the last trading happened. Post that, it's saying this is where it should have closed. Okay, due to that new SEBI rule. But in fact, even in the night session, in the gift nifty chart, you see it is gone all the way up here. So there is a gap. If you're getting confused, you can refer to the gift nifty chart and then assess whether it's a gap up or not.
okay.
Okay, so big gap up and a huge sell off. If you want to take this MPV trade, okay, this is one more system which you can trade. I'll come to that later on. This is also an MPB, right? So if you take that trade, it gave you 3R, I guess. Now, look at what price is doing. Big gap up, huge trading, I mean, huge reversal. All after that, no follow through. All are MPB bars. Bull significant trend bar. They didn't get, their scalp, but again, one more push down. Strong bear significant trend bar. Closing on its low. Again, an MPB, no follow through. Again, went into this bar turned out to be a PIB bar, pullback initiation bar. Now here, those who bought this, bull bar high for a scalp, they are making money. So, or those who bought the limit order one tick below the bull bar, they're also making money. So bulls have started to make money. This is not, a good sign for bears. Again, you got a bear significant trend bar, huge one, and then a reversal. So now the first trade which I took here, I was hoping at least that today it will follow the Nifty futures chart. Okay, I lost to an hour, but that's fine. If you see, this was an ideal M pattern, right? You can call it double top also if you want. I entered somewhere one tick below this bar because when this bar was printing, it was just jumping all the way down here and up here. There was no, proper movement also. So once it went below this bar, I entered on the options chart, but then it reversed. I was hoping at least it will give me a 1 hour somewhere, test of EMA or something like that. But it did go there, but stop loss was it. On the 50, I mean, Nifty futures chart, there was no stop loss getting taken out, but on the options chart, yes. So the other trade which I scalped out for, I shorted, okay, I bought the put options once it went below this bar slow. I was hoping for a quick scalp because after such a huge bar, there has to be some momentum, right? So I just cashed in on that. I know this is like three pushes down even on the Nifty 50 chart. That is why I don't encourage scalp trading. The actual better scalp was to buy one tick below this bar, because you know that bulls have been making money. This is also fine if you just get in, get out, but this would have been a better scalp trade.
So Puneet,
Hmm. Hello. Wait, you were saying something?
we can take an L2 entry here, right?
You mean this side?
No, previous.
Yeah.
The year, the above bear candle. Yeah,
Okay. Let me just increase this 1 minute. Are the numbers visible now?
yeah. The 13th candle.
Okay. Keep in mind. Okay. The L2 bar has to be a bare significant trend bar. Keep that in mind, and also pay attention to how the structure is forming. I'll explain in the after I explain, because this is going to be going on the YouTube, and since you guys have paid, I'll explain it later. 13th bar, I'll explain why it's not an L2. But for now, just keep in mind that it's not a good L2 structure, and neither is this bar a good signal bar.
Okay.
Okay. So bar 17 is again a okayish bull bar. Then it just rallied 4 consecutive bull bars. But on the Nifty futures chart, if you see again, it's like a MPB bull significant trend bar MPB. So it's a parabolic wedge top of sorts. I wouldn't be shorting it, but I texted to you on the group saying that okay, it might go into a trading range on the bar 23. That is when I texted you. Why did I text it? Because initially what I was hoping for was okay, maybe it will form a cup, and before forming that cup, maybe it will give me a H2 somewhere here. That H2 I can trade. If it went vertically like this near the top of the tray, I mean high of the day, then obviously then it will behave like a big down, big up kind of a trading range. But bar 23 all of a sudden made me believe that it's a trading range, because even on the Nifty 50 chart, if you see spike, the bull spike is not strong. There is no good follow through after the bull significant trend bar, multiple MPBs, MPB3. EMA and price, although they are deviating, it's not like very huge, because recently only it got tested, and also it is reversing from the initial fall of the day, where bears made their swing profits. So this is some sort of a double top structure. Yes, I get this is maybe a variation of V-shape reversal. If I mark that, some sort of a V-shape reversal there. Mm, it would have been better to get a micro double top here, and I could have traded a failed H2 structure, but that didn't happen. It just kept falling from here again. Again, even during the fall, it's not showing much strength. So I was like, okay, this is maybe going into the trading range again. But then it started stabilizing below the 20 EM again. Now, what does it look like? Spike 1, deep pullback, spike 2. And if I say this is spike 1, it's rather wrong actually. I should be calling it as trend 1, deep pullback, maybe spike 1, 2, 3. Okay, this is just one spike and pullback. Why do I call it a trend? If you see multiple PIBs, PIB, PIB, PIB. So this is where the trend was for bears, and then a deep pullback. Previous spike got invalidated, then you got a bear reversal bar. Again, what did I say yesterday in the other class? If this is where the bear momentum of the last spike started, that got invalidated, and immediately after invalidation, you have to see in what direction you get a significant trend bar. Again, you're getting a bear significant trend bar, so that is also a sign of confusion. Wait and watch. If at all, yeah.
Puneet, the
Hmm.
trade at
Hello.
So will that be can you take that trade?
Which one?
So 3 pushes down to the EMA.
This one, right?
Yeah.
This one I scalped for a short trade. I didn't buy it for a
No, I'm
trade.
saying
Two.
to the taking bull trade.
Okay, to take a long trade. I didn't take it,
Yeah.
but if you want, you can. I'm not saying no, but it's better to I have almost 90% stopped scalp trading. Very rarely I am taking now. But if you want,
Yeah.
you can take it. If you get a micro double bottom, that would have been better, or an inside bar and then a strong closing bull candle, that would have been better. If you want, you can say, okay, buying a reversal somewhere here, it's fine. But once it went all the way up here, now you have to be thinking, okay, what are the possible levels where you can get a reversal? It can test the previous spike's starting point, or this pivot, or this pivot. So all these pivots can act like a resistance for the price to go up, right? But here, if you see, it went up all the way, breaking all the recent pivots. You don't know what will happen. So here, it's more reasonable to buy a scalp. You can buy the call options if you want here. If you want to buy, the better thing would be to observe, did bulls make money in any of the fall? Here, if you see, they didn't make any money. Here, if you see, okay, they're making their scalps. So once limit order bulls have started to make money, even Elbrook says this, no, then it's okay to buy low of the, once you get a significant bear trend bar, the next bar, if it goes below its low, you can buy that. Now, in such limit order kind of scalping, you don't know where to play this, stop loss. So for that, you'll have to backtest separately. What do you mean by backtest separately? Usually the method which I'm teaching you for MPB and H2L2s, MTR, whatever it may be, there you already have a pivot where you can place your stop loss. But when you're entering on a limit order, let's say you entered one tick below this bars, bear bars low. You don't know till what point it can go low and then reverse. So usually what people or Elbrooks also teaches you this. What he says is you can place your stop loss at a measure mode target somewhere when it comes here, or when it breaks down this level, that is when you get out. What you're hoping for is a smaller profit. You're not hoping for a 1 hour. If you bought one tick below this bar, 1 hour is somewhere here. You're not hoping for that. What you're hoping for is higher odds of success and low risk to reward. So that is a different kind of trading.
Okay.
Once you start developing systems, I'll teach you how to form a system based on what how much you're risking. If it's a always huge risk and small risk to reward, you have to win on a at least 9 out of 10 trades. You have to be winning, especially in Indian markets, because of the charges and all. It's very difficult to make money if you're just scalping all the time. And if you see the second trade, if I'm swimming, so swinging on the first trade and I'm missing, either I'm doing wrong analysis or the market is more distorted like this, whatever it may be, at least on the second swing, I'm making 2 hour, 3 hour, whatever. Because it's options, it usually gives 3, 4, 5 hour. I'm not saying no. But more or less, it's fine. Okay, now this bar is not a good signal bar again. But see how the structure is. Here, if you see, it's a volatile structure. Where is the spike starting from and where is it ending? It's a single bull bar, sorry, bear bar spike. There is no, okay, this is PIV. So this is where the spike started from. This is where it ended from. And if you see, there is a deep pullback, more than 50%, retracement of this spike. And also you're getting bull significant trend bars, and bear bars are not closing on their lows. So all those features and all everything, I'll explain to you guys separately. Let me just finish this off. So here, if you see on the bar 39 on the futures chart, It's not ideal, but it's okay. It's decent enough. That is why I started, shorting this. I was a bit late. I couldn't, place my order. It was somewhere around 146 or something. The ideal entry. I entered on 150ish. So that's fine. After that, it went lower. Here also, if you see what is happening after the entry, maybe you can consider this as a significant trend bar. It is not, because it has a huge wick on the bottom of the bear bar. But still, if you call this a significant trend bar, you're getting multiple MPBs again. So after the third MPB, once it went, to my 4 point something target, I just exited on the options chart too. It did go lower, but look at the volatility on the options chart. This, I think, retraced more than 20 points or something. So that was a huge retracement. Now what is happening? On the futures chart, it was a trading range. Then you got spike one, pullback, spike two. On the index chart, this was trend one, deep pullback, spike one, pullback, spike two. Now there is some sort of a measure move on the futures chart. After that, okay, this is not an L2 again. I'll explain later for you guys. This was the spike three. Now, if you say this is L2, after spike 3, I'll usually ask you to wait and see what's happened. You'll have to consider this huge bull bar reversing up, and this again you are getting a significant bull trend bar. Also keep the count of spike in mind, and also see how volatility has increased. Okay, now this is a good L2, but did it trigger? No, this bar did not go below its low, so we don't have an entry. But instead, what are you getting? Instead of a M pattern, which is L2, you're getting a W pattern, which is failed L2. So this is a good trade for long. Here, I wouldn't be expecting, 3R, because we are already on bar 67 and you're going to enter on bar 68. So maybe 1.52R if you get, you're lucky. Because at the end of the day, very few trades you get in a month, maybe 3, 4 at most, and you won't be getting more than 2R. Any doubts for this explanation? I'll do a deep dive in the, after this now.
Yeah, yeah, okay.